On the program today, IMF launches new central bank transparency code for member countries. $40 million to support SME investment in Sierra Leone. Plus, Kenya's inflation falls to 4.36% year-on-year in July. Many thanks for joining us on Business Incorporated. I am BC Adebayo. Let's get the show started with the markets. Of course, some of the major markets we track here in Africa, like that in Nigeria and Egypt, are still closed for the Eid holidays. But in South Africa, the JSE was up 0.48% at intraday. Kenya closed negative on Thursday. Similarly, most bourses in the Gulf are also closed for the Eid holidays, but Dubai's main share index lost the most by 0.70% as at intraday, while the Abu Dhabi index was down 0.45%. That was driven down by a 1.5% drop in Emirates Telecommunications Group and a 0.4% decline in First Abu Dhabi Bank. Qatar's index traded marginally lower by 0.04%. Saudi Arabia Stock Exchange was closed but ended Tuesday's session positive 0.05%. European equities traded higher this morning as investors monitored corporate earnings and economic data on the last trading session of the month. Let's cross over to the Frankfurt Stock Exchange, where Chelsea Delany is standing by to tell us more. Good afternoon, Chelsea. We've seen European stocks set to end the month on a positive note after U.S. tech giants posted blowout earnings reports. Is the strength of big tech enough to keep the markets rising even as other companies post billions in losses due to the coronavirus?
So these earnings do seem to be cushioning the market a bit. It's really, it's going to take more time to see if this can actually become another driver for the market. Over the past several years, we've seen tech stocks, particularly these big FANG stocks, the Facebook, Apple, Amazon, Netflix, Google. They have really been the driver of stocks in the United States, but the effects have also been seen in global markets as well, the spillover effects. So these stocks have been really crucial for keeping the market afloat, and that's been true during the coronavirus pandemic as well. Those major tech stocks have been really the best performers of this year. So the fact that they are still quite strong, the fact that they continue to become more and more profitable, that is certainly giving some support to the market. But at the same time, there's a massive divergence between the fates of these technology stocks and the rest of the market. So here in Europe, the stock 600 companies are expected to report a 60% decline in earnings for the second quarter. In the U.S. and for the S&P 500, that's expected to be about a 40% decline in earnings. So we're seeing just a lot of damage across the rest of the corporate sector, from airlines to banks to car companies. Many stocks are getting hit. So even if these really upbeat tech earnings do help support the market for the meantime, it's unlikely to really completely erase all of the bigger concerns about the global economy right now.
Meanwhile, Chelsea, grim economic data continues to roll in from across the Eurozone. Spain, Italy and France have reported double-digit drops in economic activity in the second quarter. Tell us, how bad were these reports?
This data was certainly catastrophic. Most countries in the Eurozone and also globally are reporting historic contractions for the second quarter. In Spain, for example, we saw an 18.5% contraction in this quarter. In France, it was around 16%. These declines are much sharper than what we've seen, for example, from Germany, which is a 10% decline, and about the same for the United States. So here in Europe, there are certainly some countries that are getting hit a lot harder: Spain, Italy, France, and and the path for a recovery is looking quite grim right now, especially for a country like Spain, which is seeing a resurgence in cases and is now having to put in place more restrictions, and other countries themselves, including Germany, the UK, and France, are also putting restrictions on travel to the country. So that's going to deal another big blow to Spain, and now there are certainly more fears that this is we're going to start seeing this in other countries in the Eurozone, and that makes the prospects for a quick recovery that a lot of people had been hoping for look increasingly grim.
Now, the head of the European Central Bank said that it will keep its easing programs in place until at least June 2021 as the global economy recovers from the worst recession since World War II. Will that be long enough?
It likely won't be long enough. As I sort of said, it's going to take a long time for the Eurozone to recover from this crisis. Most economists don't think we're going to be back to where we were before the coronavirus pandemic until maybe 2022, maybe at the end of 2022. And that's really assuming that we don't have to go into lockdown again and that the economic recovery is quite smooth. So the fact that the ECB is indicating that the middle of 2021 might be the time that they start to take off some of these support measures, it doesn't necessarily fit with the projections that we're seeing from economists. So it is likely that the ECB is going to have to step up their stimulus efforts this year. They've already put about 3 trillion euros into helping keep borrowing costs low for governments and businesses. They likely will have to increase that amount, and depending on the shape of this recovery, depending on how fast these economies recover, they could certainly be supporting the Eurozone for much longer than another year.
Thank you, Chelsea. Do have a great weekend. Now let's head over to the UK, where Prime Minister Boris Johnson addressed the nation after his government thrust much of northern England into chaos with sudden lockdowns. Juliana Olayinka is standing by to tell us more about that. Good afternoon, Juliana. UK Prime Minister Boris Johnson held an emergency press conference regarding lockdowns in the UK. What was said and how have Britons been reacting?
Good afternoon, Bissy. Well, we got breaking news here out of England, I should say, because it doesn't affect all 4 nations of the UK. Prime Minister Boris Johnson held an emergency press conference, and what he's basically done is he's put the brakes on the easing of lockdown. Tomorrow, August the 1st, marked a significant opening of several businesses, including casinos, leisure centres, other indoor events, and he has said that that has to close now. Over the past couple of days, I've got to tell you, there's definitely been a more of an urgent tone of language anytime the Prime Minister is speaking to the media. I think it really started when suddenly overnight the government decided to change travel restrictions going to Spain, asking people to quarantine. And we've daily been seeing just some messages coming out of the Prime Minister saying the second wave is on its way, saying people need to be more careful. Last night, as I discussed with Chimsey early this morning, 4.5 million people across Greater Manchester in the northwest of the country were put into lockdown. And this information came to people via Twitter. Believe it or not, there are still some people that aren't using digital social media apps. So there's been lots of criticism for the government. There's been lots of people left completely shocked and surprised at what's happening. Of course, it's Eid today. A lot of Muslims live in the north west of England. They were looking to celebrate. Many events that were planning to take place have now had to stop. It's now illegal for people in certain parts of the country to gather, even if you're gathering in your gardens. But I think more significantly is that the rate of infection here in England is on the increase. When the ease began to happen, the Chief Medical Officer, Chris Whitty, did say that they didn't want the rate of infection to rise above 0.6. We're currently at about 0.9. And I think it's really important to emphasise the fact that Britain is still a very small country, and if you think that we've had almost 50,000 deaths, the government cannot afford the rate of infection to increase any more because we are going to see a huge wave of deaths, and it has been suddenly creeping up. So this is breaking news out of the UK, and it's very, very serious.
Now, just like you mentioned, tomorrow marks the day that employers are supposed to tell their employees to go back to work. But with the surge in coronavirus cases, are we still going to see that happen?
I don't think so, Bissy. I think it all hangs in the balance now. Like I said, there's been so many mixed messaging coming out of the government. Even yesterday, when Matt Hancock, the health secretary, told people in the northwest that you had to lock down, he said you can go to the pub, you can still go to restaurants. Does that mean you can go to restaurants with people from other households? We weren't quite sure about that. And even now, there does seem to be a little bit of tension between Chris Whitty, the chief medical officer, and Boris Johnson, the Prime Minister, when asked a question from a journalist about how far we will go in trying to bring back some of the new measures that have come into place. Chris Whitty said, and I quote, "We've probably reached the limits of what we can do in this country in terms of opening up as a society. The idea that we can open up everything is clearly wrong. Choices will need to be made." And so this is throwing a lot into the equation, because schools are supposed to be opening in about 4 or 5 weeks. Will schools be able to open if the chief medical officer is saying that we cannot go any further? Boris Johnson was to tell some businesses that they can open back tomorrow. He said they cannot open back. So why would, an employer ask their employees to come into the office when Boris Johnson, the Prime Minister, has just said it's not safe enough? So it's really chaotic. Also, as well, Bissy, it's very important to mention that tomorrow marks the end of the 80% furlough scheme. This is the scheme that the government have been using to subsidise people's wages and to pay those wages. It was 80%. It will now be reduced to 60%. We are expecting a lot of people, unfortunately, in the month of August to perhaps be made redundant. We've already seen tens of thousands of them. So we're really at a breaking point here in the UK, and it's a tough decision that the Prime Minister has to make. We've already seen a quarter of the economy contracting since the lockdown, but because we are seeing numbers of deaths much higher than our continental friends, it's impossible for Boris Johnson to go any further without risking a higher rate of infection.
I know no one wants to be in his shoes right now, but this week has seen a number of earnings, especially from banks, and the latest being NatWest. How would you describe the week for the market and earnings, and give us an outlook for next week?
Well, gosh, unfortunately, because I'm not a genie, it's so difficult to tell you what next week will bring. This time last week, a lot of Brits, over 500,000 of them, were going off on their summer holidays, trying to enjoy after having 4 months of a lockdown. That changed on the weekend. Who knows what's going to change this weekend? But one thing's for sure is we're going into a new month. We are going to see a lot more data next week, so we will still be busy trying to chew through these numbers. But I think what's going to be quite significant now is this second wave. The chief medical officer said it's actually not a second wave, it's the first wave, but it's increasing. Got to mention to you as well, and I'm sure our viewers will be aware, Britain do love good weather. This weekend is set to be the hottest weekend on record this year for Britain. So a lot of people are going to be flocking out, and that's exactly what the Prime Minister doesn't want. He wants people to spend money, but then he doesn't want an increase in coronavirus cases. So unfortunately, I can only go as far as this moment now, because it's changing so quickly. But of course, as always, we'll have the updates from you in London when they do arise. Absolutely,
Juliana. But what's most important is that everyone stays safe this period. We'll see you again next week. To enjoy your weekend. The International Monetary Fund has launched a new central bank transparency code for all member countries as it seeks to address issues of accountability and governance that will arise due to the unconventional interventions during the COVID-19 pandemic. The fund explains that the new CBT will allow central banks to measure transparency in 5 key areas of governance so as to maintain public support, safeguard independence, and enhance policy effectiveness. It adds that due to the impact of the pandemic on economies, the central banks need to increase trust and support between various stakeholders. Meantime, the World Bank has approved a $40 million grant from the International Development Association to support investment and growth of small and medium enterprises in non-mining productive sectors. The Sierra Leone Economic Diversification Project will help strengthen the business enabling environment by promoting reforms to facilitate business entry and operation, facilitate strategic public investments to improve competitiveness and private investments. Currently, SMEs are facing challenges to growth in Sierra Leone, including low access to information, poor infrastructure, limited access to finance, and weak capacity to scale up businesses. Commodity prices tend to be more volatile than many other prices in the economy because in the short term, both supply and demand are relatively price inelastic. Now, increasing commodity production takes time. If new crops must be grown, mineral exploration undertaken, or oil wells drilled, and similarly, it can take considerable time to change consumption habits. And this sluggish response means that supply and demand shocks, whether it has an adverse weather event or a natural disaster, can result in large price movements. Well, joining me now to talk about commodity prices and more is Ted George, who's the founder and chief narrative officer of Cleo's Advisory in the UK. Good afternoon, Mr. George. Thanks for joining us on the program. So commodity prices have been very volatile this year. Which would you say have been the best and the worst performers?
Well, yes, it's certainly been quite a mixed picture. Commodity prices have actually been in general decline for the last couple of years, but they very much cancelled each other out. And it's really only the first quarter of the year where we saw the collapse in energy prices that pulled down the aggregate numbers. But if we look at top performers, as you'd expect, gold is up there, 28% up over the last 12 months. And that's because it is very much seen as a safe haven investment. Most commodity prices have slipped between, let's say, 5 and 10%. But among the worst performers, we have cotton down about 23%. And this reflects the fact that we've seen such a huge drop in demand for clothing. Who is going to buy a new dress if she can't go out and show it off? And so that is really coming through into larger stocks and a reduced demand for cotton. But of course, the worst performer by far, energy. Natural gas, crude oil down by over a third. And that's really the perfect storm, combination of the spat between Russia and Saudi Arabia, and also the coronavirus impact, the drop in transport and flights. That really has hit the oil price very hard.
Now, let's talk about Nigeria now. When you look at food imports, rice prices have surged, but maize has fallen. What is driving this difference?
Well, it's true. Nigeria is very dependent on imports of those maize and rice for the population. Rice, particularly for the urbanized population, maize for more of the general population in the region. And it's certainly the largest importer in sub-Saharan Africa of both rice and maize. Rice prices have gone up because there is real concern about what's coming up in the future. It's a staple all around the world. So a lot of that is due to stockpiling and people buying more to be ready for any crisis. But there is a concern, the disruption of the virus in the key rice exporting countries in Southeast Asia could mean there's a drop in supplies later. In contrast, maize actually has been fairly flat for the last 4 years as a price. And the recent price fall really reflects the fact that there's a very good harvest in prospect in the USA, one of the major producers of maize, but also the fact that there's been a drop in demand for meat. A lot of restaurants are closed, and that means less feedstock demand, less maize demand. So two different stories for the key imports of food into Nigeria.
I can imagine. Now, what about coffee? Now, we've seen the prices mixed with mixed fortunes. What is driving the difference?
Well, we're seeing here with coffee prices, Arabica is up around 6% and Robusta down about 7%. And what that basically shows is how consumption patterns have changed. There hasn't really been a massive drop in coffee consumption, even though we've had lockdowns all over the world. A lot of people have switched to home consumption, but much of that tends to be the high-quality Arabica bean, and that's why Arabica prices have held up well. But Robusta, that tends to be lower quality, very often consumed in offices or in transport hubs. Of course, massive drop in footfall, and that's why we've seen the prices falling, along with a very strong crop in Vietnam.
Founder and Chief Narrative Officer of Cleo's Advisory in the UK, Ted George, thanks for speaking with us on the programme.
My pleasure.
Kenya's inflation fell to 4.36% year-on-year in July from 4.59% a month earlier. According to data from Kenya's National Bureau of Statistics, month-on-month inflation fell and stood at 0.08% from minus 0.31% in June. Stock oil prices now, they're recovering from further ground after touching three-week lows in the previous session, hit by a record decline in U.S. growth as the coronavirus continues to ravage the world's biggest economy and oil consumer. Brent crude was up 0.9% at $43.34 a barrel, while U.S. crude gained 0.9% to $40.27 a barrel after dropping 3.3% the previous session. Now, that leaves Brent on track for a fourth month of gains, while U.S. crude is heading for a third consecutive month of increases as the contracts have recovered from the depths reached in April when much of the world was in lockdown. Now, an increasing number of Kenyans living in the heart of Nairobi are growing herbs from their balconies or organic gardens from their homes. One small Kenyan startup is tapping into the market by mixing animal bone meal and kitchen waste to concoct a soil composite sold to urban farmers to grow food in squeezed spaces. Let's see this report.
At a backyard farm in Kenya's capital, Nairobi, Sprout Organic, a locally owned company, mixes animal bone meal, seeds, foliage, dry leaves, twigs, and kitchen waste like banana peels to concoct a composite that is sold to urban farmers to grow food in squeezed spaces. Ted Gachanga, an agronomist who co-owns Sprout, runs the business from his Nairobi residence and says his products resemble black cotton soil. Worms are usually added to the mixture to help it mature, a process that takes about 4 weeks. A 20-kilogram bag sells at 3,500 shillings. Gachanga says demand rose by 10% during the pandemic, which has cut incomes and impinged on food supply chains.
Now more than ever, people are saying they need to grow their own produce. Because in the beginning, people aren't allowed to leave their houses to do the shopping, so you'd find most families would, it would be a bother for most families to go outside to do their grocery shopping. So people started realizing that they can make better use of their spaces to grow their own produce, even if it's just a few veggies like skuma, spinach, and also like the regular herbs that you can use as a garnish or dressing on your salads or...
Close to 15,000 people in Kenya have been infected by the COVID-19 disease since the first case was reported in mid-March. Official data shows that economic growth has slowed down sharply, with many job losses in sectors like tourism. Sprout employs 3 staff, and its owners say that although their technology is not new, they have patented the formula for the composite. They hope to expand production beyond Nairobi to cover other towns. Urban farmer Francis Wachira, who's 71 years old, used to make a living by renting out tiny tin shacks he built, but the coronavirus pandemic meant his tenants could no longer pay him.
These one rooms, rental houses. Then I changed them into data goat keeping. So you can see 1, 2, 3. These are 4 rooms. These are 4 rooms. We have around 40 data goods. They are giving good money rather than renting. We are getting good money out of this.
From where we started, we have seen tremendous growth in people taking interest in planting in the balconies or in the backyards. So as a result of this, we have created systems that will aid them in this endeavor. So anybody can actually be an urban farmer.
Buy your flowers from by the roadside.
Now he sells the produce from his plot, such as kale, spinach, and herbs. Indeed, this method of composting is not new, but the owners of Sprout say they have found their own formula.
And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.